Welcome to Markets Now. I'm Michelle Rook along with Kent Beadle with Paradigm Futures. Well, we are seeing mostly lower grain prices in a quiet session, with the exception, I think, of Chicago wheat. While the livestock futures, we had some early pressure in the cattle. We're starting to come back there. Hogs are still mostly higher. In Kent, I want to talk about soybeans first because that's where we're leaking today. Are we seeing harvest pressure, and how concerned are you that we took out the August low?
So we are seeing harvest pressure. We slowed things down a little bit with rainfall in the Western Belt this past weekend, but things look open again this week. We should start seeing combines rolling again very, very soon. Technically, we've had a bad couple of weeks. We took out 50-day moving average. Last week, we took out some chart support 1330. Now we're underneath the 100-day moving average, which is the last major moving average that we've gotten underneath. So, I mean, all of the technical singles are pointing lower. And this is the time of the year when you're going to get some harvest pressure. I would note that while I think there's an awful lot of space in the country for farmers to store crops at these lower prices, between the higher interest costs and the cost of soybeans, which is still not quite three multiples, but nearly three multiples of corn. You're going to see farmers sell beans and stop those interest payments and use their space for corn, and so that adds some pressure to the marketplace.
And now that we've taken out the 1292 and a quarter August low, obviously, if we don't close above that today, what does that open us up to for downside pressure?
There's a low on the chart on the November contract at 1270, and then there's some lows underneath that. I kind of tend to lean toward what represents value, and in my opinion, 1250 to $13 is that area that represents value. Keep in mind that nearby crush margins for the processing industry are about $2.25 a bushel. If you take November beans and crush them into December meal and oil, you're still over $2 a bushel. I think that there is not a lot of reason for us to see lower bean prices unless we're going to see significantly lower product prices. And, right now the meal is actually up a couple of bucks on the day.
Corn market, though, started off to the plus side with that Mexican sale, and then we did see the market pull back here with soybeans. But let's talk about the Mexican corn business. Big sale. I think the 11th largest that we've seen on record. And what does it signal to you?
Well, I think what it signals to me is that corn is in a value area. I felt that 450 to 475 would prove to be value, and probably is the candidate for where our harvest low is going to be if we haven't made it already. I think that you're, definitely if you're Mexico, you're looking ahead to the next crop report, hearing that, traditionally a decline in yields from August to September gives you further declines in yield in October. We're also looking ahead to Friday's stocks report, keeping in mind that all red meat and poultry production was flat year over year, and yet feed residual usage is forecast to be down 5.5%. If those numbers come together a little bit on the stocks report, that would tighten up the balance sheet even a little bit further. And now you have a big export sale, and it calls into question the USDA declines in exports. And I would note as well on the export side that we're 3 weeks into weekly inspections, and each week so far this year has been ahead of the prior same week a year ago. So I know there's an awful lot of concern about export demand, and yet it's sort of proven out to be a little bit better than people thought it was going to be.
And technically, we scored new contract lows early in the week, but managed to close higher for the week, even though it was just a penny. So that was pretty impressive, wasn't it?
Yeah, it was a reversal higher, not a key reversal, but a reversal higher. I do think that rallies at this time of the year are still going to be a little difficult to sustain. You do have a certain amount of natural selling that's going to occur, and usually kills rallies at this time of the year. But again, I think what's more important is how do we act on the breaks? Are we closing low range, or are we managing to to end the weeks in the higher part of the range? We did that last week, and if we were to do that a couple more times, you'd start to feel pretty comfortable that your harvest lows are in.
Yeah. A mixed day in the wheat, Chicago wheat higher, but is that just some spread trade going on there?
A little bit of spread trade. Obviously, Chicago is at a major discount to the hard wheats. You also have continued ongoing chatter and concern about what's happening in the Black Sea. Last Friday after the close, there were attacks by Ukraine in Crimea against infrastructure relating to the Russian fleet. They retaliated here overnight with another strike on Odessa, hitting grain terminals, grain infrastructure, and silos once again. A lot of traders just sort of yawn with the wheat situation in the Black Sea and say, yeah, well, we'll figure out a way. The wheat's going to get there. The wheat's there. Russia has a lot of wheat. Okay, we get that, but at some point in time, with the world wheat exporter balance sheets as tight as they are, any real disruption out of the Black Sea could, throw some business to the U.S. fairly quickly. Our futures levels plus our current basis levels in wheat have got us, reasonably competitive. And if we have some disruptions, we could see exports pick up fairly quickly in wheat.
Yeah, although export inspections this morning, we were still behind last year by quite a ways, weren't we?
Yeah, I think 2.2 million tons behind. No, we're not off to a good start, and we'll probably have to see some export declines in the next USDA supply demand report.
And we should just mention quickly, KC wheat hitting new lows for the move here this morning, but we've had some good moisture in some of those HRW areas. Is that part of that story too?
Oh, absolutely. I'd like to see some rain, and we didn't quite remove all the drought conditions with the rains that we had during the growing season, and it's always good to see some rain down there. Certainly, the growers who are trying to get started planting wheat are quite happy to see some rain.
And the cattle market started off lower, as I mentioned this morning, kind of, I guess, fading the kettle on feed report, with some of the bears saying, hey, it was a little bit above expectations. But at the same time, if you just look at face value at the numbers, it's still confirming really tight supplies, isn't it?
Yeah, it's a fundamentally bullish report and a fundamentally bullish situation. The reason that it was construed a little bearish is that it was a little bearish relative to average trade expectations. And so, we start a little higher, but then we sell off a little bit. Now we've managed to rally here again. The market to me just acts like a bull market. We had an inside week last week, but we had a high range close after a huge week the week before. So, consolidating a big week with an inside week and a high range close is exactly what you expect in bull markets.
Yeah, very resilient, that's for sure. And it looks like funds are kind of buying on the brakes still, right?
Absolutely. They have a large position, and of course, that's going to make the ride a little rockier should they get spooked for any reason and decide they want to get out. But right now, the fundamentals are still pretty solid.
Hogs back to the plus side, except for the nearby today. But we did not have the best technical week in hogs last week, did we?
No, we had outside reversals lower in just about all the contracts. And you would expect some pretty decent follow through after that sort of price action. Yet markets are higher this morning. And the one thing I continue to point to is that discount of pork to beef prices, which is really, really large. And I think we're getting to the point in time where the consumer is going to start to take notice as we start to move toward seasonal lows in pork. As long as beef prices are as high as they are, we should see some pretty solid demand for pork at these lower values, and that should help support the market ultimately.
Yeah, maybe a little positioning out of the hogs and pigs report this week or Thursday.
Yeah, well, And not only that, we have a cold storage report this afternoon. So
True.
we've got two major fundamental inputs that the hog market's going to have to digest. Going to be very interesting on Thursday with the hogs and pigs report, because you hear really different stories out there in the countryside about what's really happening. Some are quite bullish, quite frankly, especially as it might relate to sow slaughter. And then others are a little more bearish with the numbers of pigs that you hear about still out there in barns.
Nope, I'm hearing the same thing, Kent. Thanks so much for joining us, Kent Beadle with Paradigm Futures. That is Markets Now.